Afternoon all, how are we doing? Afternoon Steve, afternoon Tom, Bellino, Derp, Yarp, afternoon. How are you all doing? Sorry, got top stuck. How's everybody doing? All good? Just a quick update. I've just done a couple of aggressive drawdown control positions. Pound Swiss is not far away. It's only 1.5%. But I've decided to do one on this. I've got a little bit, well, this account's got too much Swiss franc exposure, and this one, the pound Swiss specifically, the distance is getting quite a lot now. It's 240 pips, which is 4 ADR. So I've decided to take an aggressive drawdown control position on this one down here. Obviously, that brings the average down a lot closer, with a view to getting out on this propulsion gap here on the next move. And I've also done some on CAD Swiss. So I took an aggressive one down here. So this is 3.1. The total on was 3.1. So it's basically doubled up to 6. Nope. Sorry, I had 6 point something lots on. So I've taken a 50% aggressive drawdown control position, which takes it up to 9, with a view to getting out here on that one. The average is here. So the average is within ADR now. This is such a parabolic move on this CAD Swiss, in particular. Literally hasn't, there's not even a flag. I mean, it's ever such a slight flag, but look at the move. It's just, I've never seen anything so tight and so orderly dropped. So I've taken an aggressive one down here in the view that we're going to get some kind of market structure break. And we're sufficiently far away from all these propulsion gaps from 2 days ago now, and this previous support here, which I think is easily within reach as the pullback. So I've just taken one down there, and we'll see how that goes. But this Swiss franc's got to take its foot off the gas at some point. So I'm looking at it being basically today that we'll start to get a little bit of maybe recompense on these and a little bit of a pullback. So what a crazy move. Lots of ADRs to look at today as well. Market opens in 4 minutes. So we'll have a look at that. Afternoon, Diamond. Afternoon, Adam, Fletch, Alex, Figunia, Frederick. How you doing? Imac. Afternoon, morning there. Very good. Had a good break, Baggy. Thanks. Yeah. Play Salty Games. How you doing? Can't even channel trade that. No, you can't do anything with it. It's been quite. It's the tightest channel I've seen for an absolute age. So I'm thinking this thing needs to have a little bit of a breather after such a strong move. So there's no real key support level here. We're out at the bottom of support now. We looked at this one this morning, didn't we? We're out at the bottom of this support. So the fact that this has now got out of this low and we've made a new low by 78 pips, which is 1.5 ADR outside the lows. I get the feeling we're just going to get just a pullback on it or a flag. Even if we just got a little flag rather than even a pullback up to previous, we got that level there. And then we got that level there. So even if we just do something like that, I'm out. So I think it's good, just good timing. Just feels like it's got to have a little bit of a rest. Anywho, Tradecast podcast evening. Right. Market is opening in 2 minutes. So let's have a quick look at the Dow. So far today, the Dow hasn't done a great deal. Yeah. We've had a bit of a push down and a bit of a push up. So not really gone anywhere. We're pushing back up into this propulsion. So we had quite a big drop off a bit earlier on today, but it's pushed back up into there now, left some propulsion targets to the downside. We've got all this stuff to the upside to fill. So this is the big target at the moment for the Dow, which is all the way back up at 125 ADR. That's from last Tuesday. So this is a week ago. Since we had this big push down, we literally have gone totally sideways. So we're stuck in a 3-day range. This is day 4 of the range now. So this could go anywhere today. Obviously, earnings-wise, we've got coming out today. This morning, we've had 3M, General Electric, General Motors, McDonald's, Pepsi, Spotify, and Verizon. And we've got Google Aftermarket open and Microsoft. So there's a few areas that could drive the markets today, a few earnings. So as you can see, we are totally sideways. We're just in 2 basic ranges at the minute on the Dow. All this downside target. So there's way more downside than upside, but we need to see what happens today. So we'll have a look at this one. But upside target wise, I mean, you're looking really there, downside target there. So the main support resistance from the last few days, it's all Friday, basically. Friday was an outside bar of the previous 2 days. So sorry, Monday, yesterday was an outside bar the previous 2 days. So yeah, could be a nice tight range, but we'll see. Oh, I'm on the other account again. Aha. Outro, switched over. Switched over what? Okay, so pre-market opening range, you are out the highs. That's straight up into that propulsion and straight out of it again. So if you took the 5-minute pre-market, you just hit target, I reckon. If you're on the 15, that's long. Looking at the NASDAQ, very similar picture on the NASDAQ. Absolute choppy nightmare mess. No directional bias whatsoever. This thing's not going anywhere either. S&P, same story. We're just sideways. So there's no directional bias at all on any indices at the moment. So, oh, that's your other account, Outro. Oh, I see. Okay. DAX this morning, we didn't really get anywhere with that either. So the DAX had a really choppy open, and we came straight up, did the gap fill. So the gap fill's just been done literally on the open. So a bit of a mess at the moment, these indices. So NASDAQ is pushing the 15-minute pre-market range. You're out the low and the high. You took that one. Cool. Pretty volatile today. There's seems to be an awful lot of volume in the market. Let's see where that one goes. Afternoon, John. So we'll let that play out for a minute. ADRs, quite a few. So Aussie dollar Swiss, that's an ADR hit to the downside. So you got ADR down there. Reversal alert was down there outside of the ADR low. Huge big propulsion target to the upside here on the 5-minute chart, although that's kind of just a collapse. So I've kind of got a semi-aggressive position on this because I took one manually. That was my manual one. And that one was taken with the EA. So if we get a push up into there, I'm going to get out of my one up there and let the EA manage the rest. But yeah, pretty good. ADR reversal so far. So we've had the 5-minute reversal alert down here this morning. Really tight, huge collapse. First bullish candle, broke structure. Hasn't looked back since, but also hasn't really gone anywhere since either. So that's Aussie dollar Swiss. Aussie dollar yen, 150 ADR. So we had the initial push down into ADR. And since then, we've pushed down to 150. So your reversal alert's not going to be until all the way back up there at the moment. So looking at this one on the hourly, you got a beautiful big propulsion gap target. That's a gorgeous one. So that's basically a big day-long accumulation on Thursday, and pretty much all of Wednesday was one accumulation, which they then basically broke. Yeah, we haven't come up and retested. So that's your target. lovely target to the upside, Aussie dollar yen. So I like the look of that. Or there, either or. So if you're going to take the reversal on M5, you're not going to get in until all the way back up to 89,270, which is somewhere around there. Quarter of an ADR is 17 pips. That's 30. So even if you got in on the 5-minute reversal back up into that propulsion gap should be fairly easy. So nice easy exit on that one. CAD yen, nice extension to the downside. I'm hedged on this one at the moment. So see what happens on that. Some of these have been in for a while, getting hedged on them. So CAD yen just had the reversal alert there at 100 ADR. So that's your first reversal alert on that, I think. You wouldn't have had one there because that's the first ADR hit. So there's your reversal alert. You've just had it. So we're looking for that W pattern to come in and then go for somewhere around about a third of an ADR out of that. Euro Swiss. Euro Swiss. So that one we've had the reversal alert here. Not particularly clean that, but it does seem to be going now. So that one was on that big push on the euro. Reversing back up into propulsion. That's kind of filled. That's tiny. So yeah, I'll be watching that one there for an exit maybe. Euro yen, that's also pushed down to 125 ADR. We haven't had a reversal alert on that one yet. Have we? No. Yes, we have. Sorry. Yeah, so nice tight reversal alert just going on that one. So there's your W pattern pushing up into there or back up into that propulsion gap there. Loads of these today. All really quite nice as well. Euro Swiss, pound Swiss. So that one just got that aggressive drawdown control position on, as I said, on that reversal alert off of ADR. So it's looking for a move back up. Pound yen, these yens 150 as well. Another 150 ADR on the yen. Got a sell on this one, just a single position, I think, isn't it? Nope, sorry, I got 4 on this one. Yeah, pound yen. So I had a break-even exit on that there. Yeah, propulsion gap target fills to the downside, but for the moment, ADR reversal back up into there and then potentially push down. Either way, pound US dollar, that one's still extended. Haven't had a reversal alert on that one yet there. So this is 125 coming down to 100 ADR coming down to 125 ADR. So this is US dollar strength, isn't it? So indices will be coming down. Should be. Not at the moment. Dow's pushing up. NASDAQ, I'd imagine, is pushing down. Look at that whipsaw. So there's your 5-minute opening range on the Dow, on the NASDAQ rather. You're triggered short on that. And you're triggered long on the Dow. Messy open again. So that was the pound US dollar. Pound New Zealand dollar yen. That one's extended to the downside. Straight off of ADR. Reversal is there on that one. So straight off of ADR, looking to come up into that propulsion up there. And US dollar CAD. Extended to the upside. That one's still going. So targets to the downside galore on this US dollar CAD. Again, really strong push on this Canadian dollar weakness. This is US dollar strength at the moment rather than CAD weakness by the looks of things. Yeah, this isn't the CAD. This is the US dollar pushing at the moment. So there you go. So lots of ADR hits today, lots of ADR reversals on the cards, and quite a few RSIs as well. Let's just watch these indices and see what they're up to. So out the high on the Dow, the NASDAQ, kind of sideways. Doesn't look like there's an awful lot of movement at the moment. A lot of volatility, but no direction. Afternoon, Jessica. Afternoon, Freeman. Choppy Naz, yeah. So just taking that propulsion they bought out of that. This is massively wicky today. Very wicky. Up to. S&P's a lot tighter. See where these go. Wong. Mind looking at CAD Swiss extended on the 4 hour. Yeah, we looked at this one this morning. So this is the one I've just taken an aggressive drawdown control position on. So I had a total of 6 long on it. I've just taken an aggressive drawdown control position there with a stop under that low. So as you can see, on the way down, basically, we've had multiple pushes down, tiny little sideways move, push down, inside bar, push down, inside bar, push down, inside bar, push down, inside bar. Or they're not really inside bars. They're not making new highs, basically. So this one here, the difference. Let's play spot the difference. Good little game here. So spot the difference on why you think I might have taken an aggressive drawdown control on that candle, and I didn't take it on any of the others. I need a little countdown clock, don't I? I don't know how far behind you are on chat, so I might be sitting here for half an hour waiting for an answer. Outro chose a bad day to try out the continuous mode, yeah. Large bottom wick, inside bar. Both right, really. But yeah, so basically this is the first bullish candle we've had, which is an inside bar. Yeah, so we've had a nice, big, strong push down, rejection at the lows. Yeah, and now we've put an inside bar, 4 hour inside bar. So these other pushes down, you can see that all of these bullish candles made a new low. That one 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 made a new low. This one made a higher low. Yep. So the market structure is now a higher low and a lower high. So it's a pause. We're starting to round. If you look at it on a lower time frame, you'll find a rounding bottom. US dollar CAD 125 ADR. Aussie dollar US dollar 125 ADR. So we are basically, we've pushed down and now we are starting to round up. Yeah. So rather than with all the others, what we got was a flag or a pullback. What we've got here is a pause. So basically just a pause in momentum. So as we get a pause in momentum, it means one or two things. Either the sellers have run out of people that are interested in buying it because they've just been run over so much they've just given up, or they've got to a point where they do not want to sell into this anymore and they're just ready to start the profit take move back to the upside. So we get a pause. It could be a flag break, but then again, it could be a structure break. Don't know. But it's an inside bar on the 4 hour chart, which is obviously more bullish than bearish. We've made a higher low. First higher low we've had. So therefore, obviously on a green candle, that is, I say. So good time potentially for that move to kick in. We will see. Wow. Really, really whippy, the NASDAQ. So Spotify is NASDAQ. McDonald's is S&P. General Motors. I reckon we might be waiting, you know, for Microsoft and Google this afternoon. That might be why we're finding it choppy. Swiss yen, ADR. Aussie US ADR as well. It wasn't 125. That was just an ADR hit. So yeah, the other thing we've got coming up this afternoon, obviously, is consumer confidence. So there's a possibility the market might just be in flux waiting for that to come out. I wouldn't pay too much bias on that, really. So, but it does look like it wants to go long, doesn't it? The Dow is certainly long, so more bullish than bearish at the moment, but no real commitment. No commitment. Euro odd is also overextended on the 4-hour. Yep. Again, that's a good opportunity if you needed to or wanted to get into an aggressive drawdown. That's a beautiful RSI extension above the 80 level. So 80 is kind of 125 on CAD yen. So 80 is kind of your strong sell level, where we see, after we get to this level, it's very difficult for them to push higher. Doesn't mean they're going to pull back. Just means it's difficult to push higher. You basically run out of people that are interested in selling. You've run them all over and they're like, nah, not interested. So you can't buy anymore if there's no one left to sell to you. So you go into an accumulation. You wait, you build up enough positions so that you can drive the next leg. Very same as what's been happening there. But if you look at the speed of this movement, it's ripe for a profit take, but it's a massively bullish pair at the moment. So this euro could keep pumping. We got good news coming on the euro rates. So, but yeah, very, very extended. Hopefully, we'll get that nice profit take move back down. 125 pound US dollar. US dollar is on an absolute mission. Let's go US. Huge US dollar move going in at the moment. 125 ADR. Whoa, see that? Look at that. There's your, what the hell's that? I was going to say, looks like a news move. It's not. Big sell order just came in on the on both indices there. This made me laugh. Bank of England's pill. UK inflation may dip below 2% in 2 years. We might also have snow at Christmas at some time in the next decade. Way to be totally evasive and nondescript. At some point in the next 2 years, inflation may dip below 2%. That's what you call a long-range forecast. Just retesting lows on the NASDAQ. Okay, so this is what I would have expected to happen off the back of that US dollar strength. We didn't get it. So this looks like continued US dollar strength. Oh, no. Aussie New Zealand I got out of earlier. Exit all those positions. That older one there, exited, still pushing down. So that propulsion gap fill got done, and then we've flown out the bottom of this low, coming back down to fill these propulsion gaps now. 150 ADR. Left a lot of upside targets. I'm working on an idea for a new strategy. Towel, please. What do you need a towel, Phil? Brian, Phil, John, Bob, Frank. What's your name? Oh, about that guy, yeah, Pill. Bad name as well. Mr. Pill. He's obviously taken some pills because he thinks we're interested in what's going to happen in 2 years with inflation in a recession. It's going down. Afternoon, David. You still have the Big Mac account running? I don't have the Big Mac account running, no. I have got the Big Mac account, but I haven't got it running. I'm not playing with it anymore. In fact, I'm going to draw the money out of that one and just buy a Big Mac. Aussie New Zealand coming down to 1 ADR. So yeah, we already hit ADR. So just coming down to fill that gap. Just watch this NASDAQ. So NASDAQ's just retested yesterday's low. Bought up. Very difficult to tell where this thing's going today. It's a choppy mess. But that's a big old bear candle. So with the RSIs at the moment, what time of the Google? I don't know. Most of the time, when you see this AMC aftermarket close, yeah, So that's what that stands for, after market close. So basically after the market's closed, prior to the market opening. Gives you a clue. But it's actually not that simple and straightforward. AMC is after market. You will quite often find a lot of the time with these, they do actually get released 15 minutes before the close. Sometimes it's very hit and miss, but what they aim to do is get the results out as close to the close as they can, so that when after the market's closed and reopens for the Globex session, you can get some movement in the Globex session and get ahead of the game. So you usually find these are pretty much when the market closes in New York. But they are after market close. However, I've found on a number of occasions, sort of quarter of an hour to half an hour before the close, you end up getting a whacking great 1 hour candle going in because one of these guys has let it slip. I'm not quite sure if there's a regulation or a guidance or what it is that says you shouldn't release during the session. The reason they don't release them during the session is to try and safeguard they have safeguard cutoffs in all the indices. So if the indices move more than a percentage per day, there's a block goes in, basically to stop the bots going haywire and crashing the market, which they've done on a number of occasions. So they have a safeguard in there, and the Globex session is where you get a lot less volatility. So they like the majority of the bot purchases, if you like, to be done during Globex. So they don't like releasing it during market hours, which is why you get it before the market opens, i.e. Globex AM, and after the market closes, Globex PM, not during the market open. I don't know really whether there's probably some regulation that says you shouldn't do it, and they might get slapped with fines or something, but it does happen. But yeah, be after the close tonight. So 15-minute opening range is in. You've broken to the downside on that. The 5-minute open, you've broken to the upside. So again, very whippy. We've got 9 minutes until news on the US dollar. So if that comes out as green, we could have a big old 150 plus ADR day on the US dollar pairs. We're not far off it actually on a couple. We're 125 on pound US, 125 US CAD. Euro US hasn't hit yet, so Euro US is probably going to hit ADR in a minute. Pushing down at the moment, nearly there. So there's a lot of RSIs to look at as well. Supposed to be at 5 p.m. EST. Yeah, it's like the reason they give that time is obviously because that's the close, but it's around about. What they don't want is just a huge dump of orders when there's potentially low liquidity in the market. So just a little safeguarding thing they do. What have I just closed out there? Aussie dollar CAD's just closed out. And Euro US dollar. So Aussie dollar CAD's just closed out. 2 positions there. Pound US dollar's closed out as well. Today, that was a really nice, easy one. Entry was there this morning, out there. The other one, Euro US dollar. So Euro US dollar's entry was yesterday, closed out today, coming down into that propulsion gap. A few bits and bobs closed out. Still a negative day at the moment today, though. However, that can all change if CAD Swiss actually pops, which I'm hoping we get positive US news, which drags the CAD up today. If we can get a 125 ADR hit on the on that today. It'd be lovely. Okay, there's your consumer confidence, 104.2 on a forecast of 104. So it's bullish US. Aussie dollar yen, 175 ADR. Aussie dollar's having a terrible day today. Stop out on that Aussie Swiss by the looks of things. So that was bullish US. Ooh, off we go. Not particularly bullish move though. We are 125 ADR on US dollar CAD, so very little impact on the indices. So 104.1 is forecast, 104. We got 104.2. If it decides to update, there you go, 104.2. So same as previous, but not bearish, which is good. Right, let's go through these hourly and 4-hourly RSI extensions. Euro US dollar, massive drop ahead of news. Well, yeah, it's just a strong US dollar basically at the moment. Afternoon, Tamo. Oh, welcome back. You missed me. I was only gone for 2 days. How long? Straight out of the 90s with Forex Factory, I know. It is good though. I just like the format of Forex Factory. It's just appealing. But it is awful. It just doesn't work. All the retailers are clicking here going, oh, we're going to find out what's happening with the US dollar. Oh, right. Okay, it's bullish. By the time they got to their chart, they've missed it. Anyway, yeah, there you go. Afternoon, Gabor. 2 days for you is like 2 years for me. Oh, that's nice. He's hitting on me, I know. It's bad, isn't it? I haven't been hit on for ages. Aussie dollar yen, 125, 175 ADR. So yeah, big drop on that. Haven't had a reversal alert on this. Yeah, you would have had a reversal alert on this. Where are we? 100. You actually got a reversal. Oh, that was tight. No, that wouldn't have been one. That would have been one. So you'd have had an entry there. You've had a second entry. No, so you haven't. So you had an entry there off of 120, 100 ADR basically. You had one entry there. Second entry will be there. So that's going to be too tight to get into, probably. 31. Oh, no. Tight. That'll be tight, depending if your spacing is half an ADR or a quarter. But there is potential for a second entry on this one today as well. So this is a big old drop. Let's look at where we're heading on this. So we're coming down into these propulsion gaps. Once those are filled, 225 ADR, I would say we're looking to pull back up into there. We've got this one up here as well. And we've got these orphaned ones at the top as well, but that's they've just been missed out basically. So disgusting market today, yes. Not nice, is it? Not nice today. So yeah, I had an idea for a strategy which I'm going to develop, I think, an EA to backtest. So it's kind of a position trading strategy, but based purely on the propulsion candles, and looking for propulsion candle fills. So when we've done those two, right? When that's done and that's done, there's no reason for the market to go short anymore. There is that tiny, tiny little one there, but it's very, 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 very small. But there's no reason for the market really to go short now once we get this propulsion gap filled. So they will come down and they will test the two liquidity areas there at these supports. But that's basically it. So there's a lovely propulsion target to the upside and the upside. So I was toying with the idea of doing a strategy where once we have what we need to start monitoring the strategies, we need a decent sized propulsion gap to the upside above us, and we need a decent sized propulsion gap to the downside below us. Once we've got these all filled in, we then go, right, I'm only looking for long opportunities to get in because there's only a target to the upside. So if you look back, for example, just trying to find an obvious example. Loads of them in there, but you can see basically when we push down and we've got no more propulsion gap targets to the downside to aim for, we always tend to come up. So we always head for wherever there is a target in the market. So it makes sense that once we've completed one direction, there is only one direction left to go. And if it continues to go down, we're going to find some support area where we could take a second entry at. So I'm going to try US dollar CAD. It's an RSI extension. So what I'm going to try is I'm going to set up an account to try and manually trade this. Euro yen 150 ADR. So this yen is still pushing hard. Nice drops on these yens today. Very good strength. So yeah, I'm going to set up an account to try and manually trade these. So obviously it very much works the same as this. Look, so I've got these positions on. Why? Because there's all these targets to the downside. No reason to go up because there's no targets up above there. So come back down and do this, and then we'll have left loads of propulsion gap targets up there. So you short it until you get to a level where you're happy, and then you wait for it to complete all targets to the downside and then go back the other way. So I'm going to pick some pairs so that I don't overexpose and try and trade it manually first just to verify it. I've looked at it visually, and it's obviously, we know it works because we know propulsion gaps get filled. That's why we use the indicator. This is why this is all grey, because the market has filled all the gaps. So all these gaps to the downside, most of them, if not all of them, will get filled, won't they? So so I'm going to set an account up to basically trade this. I need to work out some rules. So I want some mechanical rules in place so that I can back test it without cocking it up, basically. But it will be as a position trading strategy as well. So because I don't think necessarily just because there's downside targets doesn't mean this won't continue to push. It's just that we haven't got anywhere to push to. So we need to spread the trades out as usual. So I'm just going to use a small account with it to do it, basically. But there will be no TPs. That's the big difference. So rather than saying I'm going to get out with a quarter of an ADR, half an ADR, or whatever, it's going to be a swing strategy. So what it will be is targeting the closest propulsion gap of a certain size. So that's basically how it would work. Ideally, if we can tie it in with some resistance, that would be perfect, support resistance areas. So right now on the euro yen, we're looking obviously for targeting to the downside, and we've got a really obvious monthly support resistance area there, which is drawn in by the indicator. That's a perfect target to the downside. So rather than with this particular strategy that I'm in now, getting out at this red line plus half an ADR, leave it to go all the way down there. So it's going to be a much longer term strategy, I think. Outro. Wow, such a bad day today. Walking away, you're off. Yeah, I can see if you're in. ORBs. Oh my God, yeah. So the opening range breakout basically was here. This is where we started. We've whipped up, whipped down, whipped up, whipped down, pushed up, completely undone it, shorted, and now it's gone straight back up. Just taking everybody out in every direction, virtually on every candle. Horrible, horrible market today. What time frame would you use for the strategy? Hourly. So the hourly propulsion, you could do it on any time frame. I mean, it's the same theory everywhere, but the idea being, so here, for example, Just trying to find a really good example. So let's say, for example, let's go back to here. So we push up, yeah. And let's say, for example, we take a short. So whatever your rules are, your target would be propulsion gaps to the downside. Yeah. If it pushes up further away and makes a new propulsion gap, which is higher than your original target, you move your target up to the closest propulsion gap. As it pushes up further, it will make more propulsion gaps. So as long as basically what you need to do is target the closest propulsion gap that is below your average price. So this Nasdaq's a bad example. So right now, if you're longing, yeah, so there's nothing but propulsion gaps to the downside, to the upside. We've done that last propulsion gap. We've pushed up, we've come back down, we've filled the propulsion gap, done. So now there is nothing but blue lines above me, which means there's nothing but upside targets. I have got into a few positions on this, starting from there. So my average price is at the moment here. So this propulsion gap here is the closest one to where I am currently. So it's very similar to what we normally do, except from a position trading perspective, except it's not going to use specific targets which are based on ADR. It's going to use targets based on propulsion. I'm still looking at the best way to get into trades as well. So support resistance is what I would really like to use, but that's going to require quite a lot of movement, and I'm not 100% sure on that being the best way to do it. So yeah, I'm working on that at the moment. As I've been working on it for a few days, but I'm getting closer now to deciding on how to actually execute it. So I'll let you know on that. Dava box style, what's that? What's Dava box? Not heard of that. Dava's box, do you mean? Trading strategy that follows the momentum of stocks. Never heard of that. That one's passed me by. That's nothing to do with propulsion gaps. Oh, hello. We've got some news coming in. New home sales are up. CB consumer confidence 101.3. What? Make your mind up. Oh, that came in 4 minutes before the actual event. Oh, so it was negative. Okay, sorry, one sec. It was negative. That was wrong. Look at that. That was bad. I didn't even look at the time. Wrong result. That was negative US. 1 year inflation rate expectation 6.2 as opposed to 6.3. So they're forecasting inflation drop. Fine. So yeah, I'll play around with that. Davos. I never heard of that. It sounds similar. It sounded similar. Nice propulsion targets. How I Made 2 million in the Stock Market. Nicholas Darvas. Good book. Haven't heard of that one at all. Famous trader from the 50s. Looks like very much Breakout sort of strategy, doesn't it? But anywho, right, let's look at these RSIs while we're waiting for this horrible, nasty mess of a market to figure its life out. Might just move that CAD Swiss. Just going to reduce the risk on this CAD Swiss a little bit. and the pound Swiss. We are starting to get some weakness on this Swiss franc, so hoping that's just going to rally now. Right. When can I release the MT5 version of the new indicator? When it's done, Gabor. Patience. I only released the MT4 version on Thursday. Then I went on holiday on Friday. I got back yesterday afternoon. Today's my first day back. Give me a chance. I'm hoping to have a draft of it this week. And if the draft works, fine, it will go up. But it's MT5, so very unlikely anything will ever work on MT5 on the first attempt. It doesn't. It's broke. Similar to Breakout, but uses boxes as direction. Yeah. US dollar Swiss. Nice profit. Yeah. That's going very nicely, that US dollar Swiss. Not far away from closing that out, I wouldn't imagine. Very close to closing that out, actually. 34-ish. 34 is TP. Let's watch it. Let's watch it live. Come on. Let's do it live on air. No rush. Go on. Go on. Go on. Go on. There we go. Live. Closed out. Ta-da. Reversal alert. Exit. Job done. Right. Aussie dollar Swiss. So Aussie dollar Swiss is a 4-hour and an hourly RSI extension. So this one obviously is the one I've taken I didn't mean to take an aggressive on it. I took a trade in case the EA didn't take one. So I've got an aggressive on it by default, which I'm not worried about because the Swiss franc is massively extended. So I do kind of want to reduce the risk on this one anyway. So yeah, big extension below the 20 level, looking for a push back up into resistance. So looking at this on the hourly, RSI got extended and stayed embedded from Friday last week. Hasn't looked back, basically. ADR hit after an ADR hit after an ADR hit. So this thing's in obviously meltdown mode at the moment. So hopefully this is where we're going to start to get that push back in the other way, in the other direction. Device swap, Duresca. Aussie dollar Swiss, multitasking. Dow dropping. Yeah, that should be off the back of the US dollar rallying off of the figures, I'd imagine. Yeah, a little bit of a rally on the US. So wouldn't hold up much hope on this today. Nasty volatile mess. Beautiful for futures traders today, but terrible for anything else. Euro US dollar just about to hit ADR. So yeah, that's Aussie dollar Swiss. Aussie dollar yen extended on the hourly. So you got 1 hour RSI extension. Same trade as this one here. Look, push down, big strong push, reversal out, big strong push. Wait for the 5-minute reversal. Target would be that propulsion or that propulsion there. If you look at it on M5, the reversal alert is going to be there. Give roughly half an ADR or so, which is 35 pips to the upside. So that's a good looking extension on the hourly. There's your Euro US dollar ADR hit. Aussie dollar, New Zealand dollar, massively extended. Just got out of that one today. That one was multi-day trade. So that was from the 11th. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Pound yen, 175 ADR. Yen is still pushing like a crazy beast. Keep going as far as I'm concerned. 200 ADR would be lovely today and get out of all that yen. So that's Aussie New Zealand, massively extended to the downside on the hourly, almost down to the 10 level. I mean, this is real uncharted territory down here. Should really put a line on these, shouldn't I? Yeah. So 10 level, basically, as you can see, very, very rare we get moves this strong. Last one was there and there. So you got that pullback, that pullback. Yeah. So we're pulling back on this at some point. I mean, 150 ADR maybe today. If it gets down to there, that would be an absolute beauty. You'll be in and out of that tomorrow. Be out of that tomorrow if you get into it now. H4, massive extension as well. We're down below the 30 level on that one now as well. So really good looking shorts, long opportunities on those. Aussie, New Zealand. Aussie dollar, US dollar is extended on the hourly. So there's your 1 hour RSI extension below the 25. That's dropping still. Potentially looking to come down into that support. So that's last week's low. This is the previous week's low, which was just broken through. So this area here, anywhere around there, be looking for a pullback back up into there. So wait, M5, reversal alert is going to be there. Just play it back up somewhere into there as a target. So that's Aussie US. It's only just extended though. It's not massively extended, that one. CAD Swiss, big extension we know about. So this is the aggressive drawdown control position that I've got on at the moment. This is the one that was the 4 hour inside bar. So we've just broken the high. So now we've got a low, higher low again, high, higher high. So market structure shifted. We are still inside bar though. So we're an inside bar, two inside bar basically on that candle. So it ain't over until we've broken that high. So yeah, CAD Swiss looks good. Massive extension on this. It's like super embedded down below. You know, let's stick the 10 on again. And the 90, I've got an 89 on there. So down here, we don't often get down extended below the 10 level. Very rare. Push. So we're getting a pullback back up into the 24. When you get this far away from the 24, it's very, very hard for the market to sustain any kind of continued rally short. So, you know, there's just no body left down here willing to buy. They've all been run over. They've all been stopped out so many times. There's just no buyers left. So you're looking for signs of the market slowing really down, i.e. we stop making new lows. And as soon as we stop making new lows, we start to put those new highs in. That's when your market structure shifts back the other side. So this is where you would look to do it. If you go and do back testing with the market reversal alerts EA, and you test the H4 M15 or the H4 M5 set file with levels of 20 and 10 instead of 30s and 25s, you will get way less trades, but you will find those trades will play out usually within days, because it is so difficult for the market to sustain anything longer than that. It has to be something really fundamental that has changed that allows the market to push further. So we haven't had that on the CAD or the Swiss. All we've had is weak oil, which is coming down to fill that gap, which we said about this morning. So that was the short this morning. So we said we're going to come down and fill that gap. When that gap gets filled, that Canadian dollar will start to rally. So when that Canadian dollar starts to rally and the Swiss franc backs off, we get a big push on the CAD Swiss, and it'll be a very fast move, like, 2 or 3 big 4-hour candles like this, bang. You'll suddenly find yourself after that back up here within 2 days, back up to that 24, and then we'll see if we can get sustained move to the downside. So the market structure has to start its pullback before it can do its next leg, because if it can't pull back, it can't build enough orders to drive back down again. So CAD Swiss looks really good, which we know about in it already. CAD Yen extended on the downside on the hourly. We are also just about to get an alert on the 4-hour on the CAD Yen when that candle closes in 2.5 hours. But we are extended now to the downside. That's annoying. That short didn't manage to get out of the short. Still pip 60 pips to the downside on that. Oh, sorry, 34 pips. What's the ADR? 38. Surely that should have been an exit, shouldn't it? Oh, got to do manual maths on this one. Wasn't enough. So yeah, still going on that one. For a pullback, drop, and then we'll get out. The long when we start to push back up again. So that's nice extended, nice looking opportunity for a long on that CAD yen. I've already got a long on it here, which was taken this morning. So that's the first H1M5 reversal on that one. Euro odd, big extension on Euro odd, huge extension again. Euro and the Swiss absolutely flying. The Australian dollar is massively weak. So we have got some signs of weakness starting to kick in. We had a big down candle this morning. We just rolled over a little bit. We've just taken that high out. We're putting a big old bearish engulfing in now. So we've got 39 minutes left on this candle. If this candle closes bearish, there's a good chance this might be the spot. So you're going to get that reversal alert on the hourly and then start to come back down and fill some of these gaps to the downside before the news next week. Euro CAD, so that's extended on the hourly as well, up to the 80 level on the hourly. So big extension on the hourly on that. Beautiful hammer going in, or rather shooting star at the moment, which is what you find at the end of trends. So big gap fill to the downside. So that's the Euro odd. Euro CAD extended to the upside. That one's rolling over already. Beautiful rollover at the highs there. Hourly. So that's pretty much up at the 90. See what I mean about the 90? Yeah. So difficult for them to get anywhere beyond that 90 level because the market is just so exhausted, so far removed from that 24. It needs the 24 and the 72 zone acts like a magnet. It's the monthly and quarterly daily moving averages. So this is where, if you are going to trend, this is where you bounce the 24.72 area. So the further away from that 24 you get, either price has to pause and flag and wait for the 24 to catch it before it can get some momentum, or what more likely happens is we pull back into the 24 and then start the next leg, start the bounce up. So yeah, very big extension there on the 4 hour. Hourly, we got embedded. So we got extended here. See, that's my first entry there. Got extended, embedded. And so just waiting for that to come down. If it does 1.5 ADR to the downside, I'm out. Propulsion targets to fill down here as well. So looks good for shorts. Euro CAD, Euro pound. Extended on the 4 hour. Yeah, just extended on the 4 hour. Just taken out last week's high and previous week's high. So these two areas close together, which is also a previous high from weeks ago as well. So that's that 5-week high basically there. So you got all three highs, which is where we are now. So if this is going to form a range, that's where you would expect the strongest resistance to be and the most limit orders to trigger to drive back down to the lows down here again. So that is good. Only just extended though, the euro pound. Very low ADR as well, only 39 ADR, so not the greatest thing to trade. Pound odd. So looking at the pound pairs, got short on this one already. So this is extended on the 4 hour, just above the 75 level. Hourly RSI extension this morning. So that one I took the 5-minute reversal alert, or rather the EA took the 5-minute reversal alert, which was there. That was your first reversal alert this morning. Then we invalidated that high, put in an M pattern, dropped down into propulsion, bounced out of propulsion. Didn't quite get far enough for me to get out of that. So pushed up, down, stuck, not going anywhere. So in it short, waiting. Pound CAD. Hourly RSI extension this morning. That one started to roll over nicely. We've just had the hourly reversal alert on that. Beautiful targets to the downside. Big targets as well. So looking for that to come back down into there. 4-hour RSI extension. You can see absolutely huge move. 4 positions on this one. Averages at ADR. So just waiting for that pullback on this. So again, we looked at this one this morning. Stick a fib on that. Yeah, you're looking at 38 retracement is back down into here, which is just below this propulsion gap. Medium retracement, 50, back down into that propulsion gap, and the 24. And then a deep retracement would be somewhere down into there. So very, very extended. That one on the 4-hour above the 80 level. Again, typically we get a nice big pullback when we get extended above the 80. So, and especially going parabolic with no stop. So Canadian dollar, we're just waiting for that CAD strength. And thankfully, we've just had some positive movement off the US off the back of negative news, which means we may well just get a good, strong couple of day push on the US dollar, which will drag the CAD with it. Pound Swiss, extended to the downside. That's pushing nicely. Again, 4-hour RSI extension below the 30. Hourly, we just tapped into the 25 level. There's your entry on your reversal alert. Actually, no, the entry on your reversal alert was there. That's my aggressive drawdown control position. So looking for that just to push up. Nice extension. We've got the pound yen, pound New Zealand, and pound US all extended on the hourlies. So this yen is on an absolute mission. It's going to stop soon. It's tired. So big, strong push down. Same with the New Zealand, pound New Zealand. That's come down as well. And the pound US. Yeah, big, strong pushes down. So the US dollar and the yen, very, very, very strong today. Obviously, mean reversion opportunity at ADR is you're just looking for scalps. So you're looking for the nearest propulsion gap, quarter of an ADR, third of an ADR, something like that. So dropping down onto M5, wait for that reversal alert and just try and grab third or a quarter of an ADR move out of it as a scalp. New Zealand dollar CAD extended on the hourly as well, pushing up into propulsion. Got 2 targets to the upside, up at ADR. This is just coming off of a monthly level now. Again, downside targets and upside targets. So that would be the absolute ideal entry up there somewhere. Nice extended on the hourly. So again, drop down M5. First entry was this morning on that one here. So that was your reversal alert this morning in there. As soon as we took the entry, pushed up. So you just had a reversal alert again. It's not retesting. It's just literally going in legs. It's pushing, accumulating. A little bit of a push, accumulation, push, accumulation. Yeah. So it's not got any reason to do any kind of pullback just yet. It could do. If not, that's where I'll be looking to get in at ADR when we've got that propulsion gap done. By the time you get up there, you've got 2 solid days of push, 2 to 3 ADR move to the upside, and then you can obviously just mean revert it back down into these huge targets we've put in. And we've got US dollar CAD. Again, we looked at this one, huge long at the moment. So this is heading up into here. So this low, which got broken. Yeah, that's the propulsion. That's where we're headed, 175 ADR. We've got another little one there. We've got some couple of tiny ones left to the upside, but now we've got these big propulsion gap targets to the downside. So again, looking for some kind of drop back down at some point. Nicely extended on the hourly, 4 hourly as well. You are nicely extended. We've got divergence on the 4 hour as well. Not so much now, actually. So we did have decent divergence. It's now pushed up a little bit more. So it's kind of flat divergence, but still bearish divergence. Too extended, going to need a pullback. And US dollar Swiss. That one's played out, already out. In and out, one does a beauty. So H1 RSI extension. EA got me in this morning. In and out in a day. Can't argue with that. Pound yen. Did I miss pound yen? No, just done pound yen. Hugely extended 175 ADR. Long. Afternoon, Alan. Afternoon, Evans. The yen is happy today. It certainly is. Big old ADR hits today on the yen. So we got Aussie yen 175 and pound yen 175, euro yen 150. So big opportunities for mean reversions on these. M5 reversal alert there. So as soon as you get that W pattern reversal, be on some kind of pullback, hopefully. Dow still hovering around there. So is the NASDAQ. Oh, actually, no, NASDAQ's actually dropped now. Yeah, so NASDAQ's come down. So where are we headed on that? So be heading down to that low, basically. These two lows, which is pretty much at. That's your next support. On the NASDAQ, if it gets there. And we've got all this as well down here. Look. Unlikely to get 175 ADR out of this today. The US dollar would have to be on absolute fire to drive it all the way down there. It's not. Back up into profit now for the day. I've got loads I can bank as well. Let these all just play out. I tend to take some of these yens off, but Alan, quick question regarding the EA. How do you restrict trades on the EA to keep your exposure low? I.e., on the bootcamp, you said only to trade 2 pairs of one currency for exposure. Yeah, so you basically stop getting into pairs when you're exposed, basically. So you can trade either way. So here, for example, it depends how you set yourself up. So what some people do is they will stick the EA on every pair. And then as soon as you see your exposure on the dashboard hit, sort of 2 yens long, you basically just turn off all the other yens. Or as Impulse has just said, put them onto alert mode. So there's 2 ways you can do it. You can either basically just go to the pair and you can either just untick allow live trading in the common tab, which is the easiest thing to do. Or you can basically put it into alert mode. But what I find easier to do is if you're going to do it that way, the easiest thing to do is to put it into allow live trading no, because what that does is it turns the smiley face sad. So you can instantly see that that one is not ready to trade. But depending on whether you are doing it that way or you are basically waiting for the condition to get met and then putting the EA on the chart, that way you basically are only going to get exposed on the stuff that you put the EA onto. But it doesn't. If the EA has taken too much exposure, because what can happen if you load it up onto all 28 pairs, and you get a move like this, where you've got a massively strong yen, what's going to happen is, if you're not watching it, if you're asleep, for example, when this move happens, it will take potentially a mean reversion trade on every single yen pair. So this is why you check this every sort of 4 hours or so. It's like, right, okay, I've got too much exposure on the yen. Swiss yen 125 ADR. So you can go into the VPS and basically just close out manually any additional yens that you've got on that you don't want. Because by the very nature of the reversal alert, what normally happens, oil 125 ADR, oil gap fill has probably just been done. What tends to happen is once you've got that reversal alert, so let's say we get the reversal alert there, for example, it goes into profit, doesn't it, normally? And then it comes back and retests and bounces, or it just slams through and invalidates the signal. So you're never going to be massively in drawdown. So if you open up your chart and go, oh my God, I've got 5 Swissies on, close some. I mean, these are obviously pairs that have been trading for a while. But if it had just taken these trades, you're checking it regularly, just close them out and then go and manually put it onto allow live trading no. Or if you're not going to run it on all of them, as I normally do, is I wait for the alerts and then I stick the EA on. So I go Aussie dollar Swiss. That looks like a good opportunity for a long. Reverse alert was down there. So that's where I would have been alerted to the fact, as we were coming down here, I'd have been alerted to the fact that it was hourly RSI extension. So I basically would stick the EA on and go, get me in long. Where's my set file gone? I don't know which one my set is. I haven't got it on this one because this isn't one of the ones I trade. But you just put your set file on and say, long signals, please. Go. It's up to you. Wouldn't you be too late when putting it on after? No, because this is monitoring the condition of the market, isn't it? It's not monitoring the reversal alert. And if there has been a reversal alert, so for example, let's say Aussie dollar Swiss, I'd just opened up my chart, so I saw Aussie dollar Swiss extended on the hourly and the 4 hourly, and I go, right, that's brilliant, I want to get in. So I look at M5 and go, oh damn, I've missed it. I just get in. Or what you can do is you can go up to a higher time frame. That's miles away. That's far too far away. I wouldn't take that. But you just get in and then put the EA on and let the EA manage the additional positions for you. So it depends. This is how I've always traded. Normally, my first position is either taken with the EA because I've seen I like it, or that's when I was looking for the support resistance set file. I couldn't find it. I was either going blind. Oh, there it is. I've got an underscore on mine so that I can easily identify it. There you go. So put the support resistance set file on and just go magic number, whatever, and say, I want to go long, please. And that will just start position trading it for me. Euro yen 175 ADR. But yeah, I mean, basically, if you put it on all 28 pairs, then yes, you've got the danger of getting overexposed, but only if you're not watching what you're doing. And this is what I keep saying. You are the trader. Your job as the trader is to manage your positions, manage your portfolio, manage your trades. If you see on your trade manager dashboard, you are massively overexposed on something, do something about it. Make sure that you don't get any further exposure on. Or if you're happy to get exposed because whatever XYZ reason, that's fine. But, taught in the bootcamp, I teach no more than 2 trades in one direction. So, for example, Euro, we got 2 longs on. You can't take any more Euro trades. Since then, I've kind of gone, well, actually, yeah, you could take something if it meant that it put Euro exposure on short for you, because you are going to win one of those two. If you're already exposed long and those longs aren't working, I don't see any reason not to get in short, because unless there's a real fundamental reason. So if you come over to the buyer scorecard and it says plus 14, you don't want to be going the other way, do you? You want to be going with the bias that the market's expected to go. You look at US dollar CAD, it's a plus 10. Yeah, it's a long. However, at the moment, I've got multiple shorts on it because at the moment, when I started on this, we weren't a plus 10. We were a plus 6. Now it's a plus 10. It's changed. So these are the ones I said, a couple of weeks ago. These are the ones got to start looking now at maybe switching direction. Aussie dollar, US dollar, and US dollar CAD. That's the maximum that these can get to. So these are all plus 2s. These cannot get above plus 6s and 7s. That can't get above a plus 10 because the only thing that can affect it on an intraday basis is retail sentiment. And retail are short, therefore it's pushing high. If it gets too extended, obviously we'll be doing drawdown control and taking losses on it. So 175 now, euro yen. Out of euro yen, that's just closed out. So that was initial entry there on that RSI extension. Pushed out above that monthly high. Second entry there. Third entry there. Exit all 3 positions. And we got 1 drawdown control, 2 drawdown controls done as well along the way. And now it's nicely extended, ready for a long. This yen's really moving. Greedy mode. Right. Hopefully that answers the question, Alan. But the coding in the ability to manage risk onto the market reverse alerts EA is quite complex, just because of all the other functions in it. So it's not something I really want to try and attempt to program in because people get into a bit of a mess with it with the amount of inputs there are at the moment as it is. So adding more into it would just add much more complication. So exposure is something you really need to manage yourself because there may be pairs that you will want to get overexposed on. So, for the yen, for example, going long on the yen right now, probably a good idea after what the Bank of Japan has come out and said over the last 3 or 4 days. Highly likely we're going to power up the yen. There we go. Exactly what's happening at the moment. So you might want to get overexposed on the yen long. So, having any control in there on an individual currency basis is very, very difficult. It would have to be a blanket thing, and it's just not practical to do it. Too difficult. So you got to manage it, and that's what the Trade Manager Dash is for, obviously. Right, that's all I've got for you for this afternoon. There's not a lot else going on. The Dow is broken out to the downside. The Nasdaq has finally decided to break out to the downside, but absolute choppy mess of nightmare today on the open. It's gone now, but really, really whippy. First 20 minutes, well, 35 minutes, really, really whippy. Not much fun today at all. Anybody got anything else they want to discuss? Any other pairs they want to look at? Anything at all? DAX is totally sideways today as well. Gold, Chris. Chris has triggered the John Wick. So gold, obviously US dollar cross. Wow, it's actually reacted positively as well. So gold is pretty strong at the moment. This looks a little bit like a safe haven run. In fact, we've got strong gold and strong yen at the same time. But we've got these propulsion gap targets to the upside. We've also got a lot of downside targets on gold. So I'm more short than long bias at the moment, just purely because the weakness that we've had, which has given this a bit of a push against the US dollar, potentially it's going to come down and undo all of that. Someone contacting me on MQL5 Marketplace. So yeah, big strong pushes to the downside is what I'm expecting off of it, but we will see. We've got targets to the upside now. So where we are at the minute, very difficult to tell which way this one's going to go. We've got lots of news coming up this week on the US dollar. So the GDP figures, for example, and we've got the PCE on Friday, and unemployment claims as well on Wednesday as well. So could go either way. But I would say we're probably going to get a little bit more strength on this US dollar moving into the next round of interest rate rises. So I would be more inclined for shorts at the moment than longs. But it only takes one thing to kick this US dollar into touch at the moment. It's much more sensitive to negative news of the US dollar at the minute than it is to positive. So when we get negative news, it's much more likely to get run over than positive news is likely to run everybody over at the minute. So very hard to tell. That's why I don't trade it. Unpredictable beast. Impulse. So you're wondering if I'm in XXX odd on 2 different pairs and also odd XXX in 2 pairs, would you consider it overexposing? It's direction. You can be exposed on the Australian dollar as much as you like. It's the direction of exposure. Yeah. So New Zealand here, for example, we've got 4 exposures long. We've got 2 exposures short. New Zealand has got 6 exposures on it. It's the direction of your exposure which is important. You should have 2 on in one direction or 2 on in another direction, ideally. So if you went XXX odd and odd XXX, you haven't told me whether you've longed them or shorted them. So I've no idea what your exposure is. If you'd gone short XXX odd twice, and then you've gone long odd XXX twice, you've gone 4 times short. No, sorry, 4 times long on Australian dollar, haven't you? Yeah. So that's overexposure, isn't it? If you're long on the Aussie dollar 4 times, if that Aussie dollar comes down, it's going to hurt 4 times more than if you had 1 position on. Or twice as much as if you only had 2 positions on. It's just to limit your exposure on a currency. Did you do Euro CAD and Pound CAD? Yeah. On both of those. Shorts. Very extended at the minute. Short. Another way to reduce risk is to slightly increase the distance between the trades as the price goes against you. Reduce risk. New Zealand dollar yen 125 ADR. All these yens still pushing. Yeah, well, you should be spacing your positions out anyway. But if you are, even if you're spacing your positions out very nicely, half an ADR, for example, apart, if you've got 4 times exposure on one direction, that's 4 times the drawdown. Yeah, if you go short on Aussie dollar, US dollar, for example, yeah, and the Aussie dollar pushes by 3 ADR against you, right? You've gone 3 ADR into drawdown on the Australian dollar. If you had short Aussie dollar CAD as well, you are now 6 ADR potentially in drawdown. Yeah. If you'd gone short Aussie dollar, New Zealand dollar, you have now got 9 ADR in drawdown. I'm assuming here that the Australian dollar is massively bullish. Yeah. So that all the Aussie dollar pairs have been pushing equally at the same time. That's 9 ADR in drawdown. You started off with 3. You've got 3 times the exposure. If you've got another Aussie dollar pair on, giving you 4 Aussie dollar shorts on, and that thing drives higher, that's 12 ADR potentially you could go into drawdown by. Imagine going 1 pair into drawdown by 12 ADR. You'd be destroyed. Not destroyed, but in a lot more pain than normal. And again, it all depends on the amount you're putting on. So there's nothing wrong. If you want to overexpose yourself like this account is here, and just trade all pairs, all 28 pairs, do it. But don't use 0.5% risk or 1/3% risk, or maybe even 1/4% risk. Use 0.1% risk. So if you want to get into every pair, as Alan said, you know, if you just want to put it on every pair and not bother about having to manage exposure, you can do that, but reduce your risk. Yeah. So because you could potentially get 6 positions on in one direction on one instrument. Yeah. So reduce your risk by 6 times. Fine. Because all it is the same is having 1 position, or don't reduce it by 6 times, reduce it by 3 times. So it's the same as having 2 positions in one direction with normal risk. If you drop your risk by 3 times, you can now take 6 positions against you, can't you? You can do that if you wanted to. Obviously, you're going to limit the profit potential, but it's the same thing. Again, there are no rights and wrongs. Just look after your... It's more so that you can understand exposure, right? So let's say, for example, there's a CAD news event coming up, which we've got, right? So I'm looking at this account now going, CAD. I've got five long exposures on this account on the Canadian dollar. So on a Friday, the Canadian GDP is released. Yeah. So let's say that GDP figure is absolutely terrible and the Canadian dollar tanks. There's 5 positions that are going to go into drawdown at the same time by a fair old rate. So as long as you are aware of that, what you can do before Friday is go, okay, I'm going to reduce that. I'm going to reduce that. And I'm going to reduce that. Yeah, so New Zealand dollar CAD, for example, is sitting here in 0.1% of drawdown. I could basically scratch that completely and just go, well, I'll just take 0.1 off. So therefore, I've now got 1 less Canadian dollar exposure. New Zealand dollar, US dollar, I've got 2 positions on that with 0.3. So I could scratch that and go, oh, I'll just take another 0.5. So I'll knock 0.5 profit off of my account. And now my exposure is down to a much more manageable level. So, you know, again, there's no rights and wrongs. But the reason I give the example of using 2 as a max is so everyone's aware of exposure. And the differences between going to draw down on 1 pair and 6 pairs is the difference between going into 3% drawdown on your account and potentially 20% drawdown on your account on 1 instrument, 1 currency. That's why it's important. But if you reduce your risk 3 times lower, get them all if you want to. But you're not going to make as much money when you bank every trade. Every trade is still going to make the same amount of pips, if you like, the same amount of movement. It will get out at the same amount of movement. But your currency, your amounts that you make on it will have to be slightly adjusted in the EA. Hopefully that explains that. CAD Swiss, I think I've already covered that. Yeah, in detail. CAD Swiss, done it. It's right. So how's that for a lesson in aggressive drawdown control? At the start of this today's live room, we looked at this and why I took this aggressive drawdown control position being an inside bar, higher low. Bang. For that. Like. So I got excited then. Impulse. If I would have 20,000 of my own money in an account, I would put 0.1% on all 28 pairs. Yeah. It doesn't matter what your account size is, Impulse. 0.1% of your account is 0.1% of your account. Whether you've got a $20,000 account or a $200,000 account, 0.1% is 0.1%. This is why we use percentages. We don't concentrate on money. We concentrate on gain as a percentage, and we concentrate on drawdown as a percentage of your account. Yeah. So this morning, CAD Swiss was in 2.5% of drawdown. So I decided to take an aggressive drawdown control position. We are now sitting in 0.82%. I haven't got a clue what the monetary amounts are. Don't care. This means nothing. Yeah. Your job is to return money on your investment. Your investment is your account. Yeah. Your return on investment is your profit. This is what we're interested in. So if you're risking 0.2% of your account, you're risking twice as much as if you risk 0.1% of your account, which is risking twice as much as if you risk 0.05% of your account. If you risk 1% of your account, you will die immediately. Not immediately. Take a week or so, but you'll be dead. But your account will be dead. And then if your wife finds out, you'll be dead. Or husband. Yeah. So it doesn't matter. And this is why I teach pips. You know, day one of the bootcamp is how do you measure success? We do not talk about pips. Pips are totally irrelevant because the pip amount on every instrument is totally different. You can't measure anything in pips. You measure everything in percentage gains or losses or drawdown. Is that account shown real or this is a demo, Sagar? This is all these accounts on here are running every pair with every strategy so that you can see every trade basically being taken. So these are all. I haven't got 400 grand, Sagar. As much as I'd love to have 400 grand in my trading account, I have not. Brian, found an older indicator over the weekend while cleaning up MT4. I have an idea for an EA. Send it over. I'll have a look. I banked 0.55% today on my 100K funded. Perfect. Max of 1.5% drawdown. Cool. So that's, I mean, this is exactly what I teach in the boot camp. If you can bank 0.5% a day, you are banking 10% a month. Yeah. That is huge. Most traders, there's very few traders out there that make 10% net gain a month. Yeah. 0.5% a day is all you're looking for. But what everybody's trying to do is they're trying to risk a high amount to return a high amount. That's where it all goes wrong. When you're risking a tiny amount. Look at what I've got on. I've got 47 lots on. My drawdown is 10% on the account, on this account. Well, I haven't. The EA has. It's all relative because these positions are so small in comparison to the account. It doesn't matter if things go into drawdown. Look at this. I got into a position there. Right? And for literally 3 days solid, things gone against me. Doesn't matter. The actual drawdown on this instrument is less than 1%. After 3 days of being wrong. That's the whole purpose of this. Looking to bank tiny little amounts of money regularly to build this balance up. We've got a week left. So this is probably going to bank 15% this month. You are now one in 100 traders that can do that. The 1% of people that can actually bank a profit a month. And all you're looking for is 0.5% a day. Not looking for massive fortunes. That's what it's all about. We can always make more money by having our starting balance higher. We can always get money from places. What we can't do is become consistent, successfully, and consistently profitable, which makes you successful. So if you focus on the process of becoming consistent, money will come to you. You'll find money. Family members will be throwing themselves at you going, what? You can give me a 10% return? I can't get that from the bank. No. Okay, so we've got some reverse alerts that was probably just triggered on some of these CAD moves. And Swiss franc. So Swiss franc has just dramatically weakened. Everything's pumping against the Swissy. Hopefully, this is the start of the pullback. Franco, I trade the most 2 pairs at a time, multi-entries. Rather make a little than lose a lot, working many pairs. Yeah, you can do that. Again, there is, like I said, there's no right or wrongs in anything to do with any type of trading. Do what makes you feel comfortable. That's the whole point of position trading, is doing it so that you don't feel uncomfortable. How many lots will the EA take when setting 0.1% of the account? The EA calculates that. That's the purpose of the EA. You don't have to do anything. Yeah. So if you risk 0.1%. Why can't I type? So you risk 0.1% of your account. Yeah. That is calculated on your stop of whatever it is. So I use, this isn't my set file. So I use, based on ADR mode, half an ADR. So it's automatically calculated based on that. So I'm looking to risk an amount. So basically all I'm saying with all my set files, what I do, the reason I pick half an ADR is because we know price spends 58% of its time within its average daily range. So what I'm saying is get me into a trade, and if it moves half an ADR against me, I want to be risking no more than 0.25%. So if price moves 1 ADR against me, I am going to be 0.5% in drawdown. If it moves 2 ADR against me, I'm going to be 1% in drawdown. Bear in mind, I'm only getting in when market has pushed hard in one direction and the RSI is extended and we're ready for a profit take. I'm saying at that point, when the market is stretched, I'm giving myself 2 ADR of movement against me being really wrong before I even get into 1% of drawdown on my account. That's how small the risk is. That's why we use ADR. We don't use pips. Pips are irrelevant. I can't pick pips, but the average daily movement of an instrument is the average daily movement of an instrument. I don't care if it's 10 pips or 10,000 pips. It's irrelevant. It's his average daily movement. So I'm going to risk an amount of my account based on the average daily movement of the instrument. Therefore, my risk is controlled and contained within that instrument's range of movement, which means that I can't get in with a ridiculous lot size because I'm basing it on the movement of the currency. That's the whole reason. Again, all in the bootcamp. Why we use percentages, why we use ADR. We don't use pips or anything like that. Everyone, gamblers are trading guru dreams. Take a winner and turn it into a loser. Being greedy And fantasy trading, yeah, well, that's life. That's this industry. Gutted, because you deserve to make much money for running such a great channel for free. I know, Sega. If you want to give me 400 grand, Sega, I'll quite happily trade it for you. I do okay, don't worry. You're a gad. Yeah, it's coming down. Reverse alert on the hourly. All starting to roll over. Euro's starting to weaken a little bit. Canadian dollar starting to strengthen. It's all starting to mean revert. Everything's just starting to mean revert. I'll have a look at that, Brian, a bit later. If all stop loss is set to false, how many stop loss calculates EA? So if you can't set your stop loss to false, Derek. The stop loss is always set to true if you're going to. This is all covered in the bootcamp and in the indicator EA, in the EA videos. Yeah. So inputs are, well, the inputs I use are, I risk a percentage of my account. In this case, 0.2, based on a stop loss set to true of half an ADR. Yeah. So 0.2% risk on half an ADR of movement against me with a stop loss. Yeah. And then as soon as the EA has used that to calculate the risk and the lot sizing, the EA removes the stop loss. Use fake stop loss to calculate lot sizing true. So it removes the stop loss after the position is taken. But it has to have a stop loss to be able to calculate the position, doesn't it? So that's the other thing you could do if you wanted to get into multiple pairs. If you wanted to trade all 28 pairs, what you could also do is move the stop loss, instead of half an ADR away, use 1 ADR as a calculation. Because then that's going to risk half as much, isn't it? Position trading has given me freedom from gut pain and mental stress. I don't fear drawdown like I did before Captain Lee's teachings. Mandy, US dollar CAD. Yeah, we've looked at all of these. You're going to go back and watch the stream again. But yeah, US dollar CAD pushing hard at the moment. I'm short at the moment based on the RSI extension on the hourly. I'm back here. Sorry, from back there. That's my first entry, second entry. Third entry was today. Waiting for that profit take move on that one. Yeah, I've covered. I've covered all of this. So go back, just scroll back through the replay. Right, I'm going to leave it there. It is 4 o'clock. I'll be back tomorrow morning, 7:50, same time. I'll be back 2:20 tomorrow afternoon for the New York session. Anything you need, let me know. I'll be in the Telegram group. Hopefully all this just starts to continue to unravel. It looks like these yens are getting a little tired now. We are starting to see a little bit of weakness starting to creep in. So you might want to take some yen profit off if you've got stuff on. But I'm out of most of the yens anyway. Oil as well. Sorry, the other thing, just before I go. So we're getting very close now. Oil's just made a new low on last week. We've got literally that far to go before the gap fill. So it's very, very close to gap fill. We're looking at 10 pips. So hardly any more movement on oil on that. Gap fill's done. All right. So have a good afternoon for the rest of it, and good evening, and etc. etc. I'll be back tomorrow morning, 7:50, same time. And yeah, hopefully you have a profitable day, and we'll see you guys tomorrow.